When a high-performing asset undergoes a sharp market correction, the natural instinct for many participants is to step in and capture the absolute bottom. However, predicting the exact end of a sell-off can introduce unnecessary risk, regardless of your analytical background. Every institutional framework looks for structural footprints. In pure price action, those footprints are historical demand zones. But here is the critical distinction. A major structural zone is not an automatic buy order. It is strictly an observation zone. It tells you where commercial interest historically rested, but real-time confirmation tells you when to allocate capital safely. Many trading frameworks offer valuable insights into market participation, but a universal challenge across the board is executing a trade prematurely. A historical structural demand zone identified on your chart is a map. It reveals where institutional buying power previously caused an imbalance. But when the market is dropping into that zone, a systematic trader does not blind buy. You observe. You wait to see if buyers actively step in to defend that specific floor. No matter what strategy you use, waiting for pure price action confirmation inside an observation zone ensures true market validation before risking a single dollar. Now let's simplify the execution inside the zone. As price enters this automated Elkhouly SND Pro demand layer, we look for one simple fact, an active response from the buyers. Look at this candle right here. The long wick at the bottom proves that the downward momentum was entirely rejected by buy-side volume. This isn't guessing or predicting. It is visible proof on your chart that the historical demand structure is holding. By waiting for this single candle reaction, you remove all emotional guesswork. Protecting your trading capital does not require a complicated setup or hidden trading secrets. It requires a cold, mechanical process. Once your historical demand zone is validated by a price action trigger, your execution parameters are completely fixed. Your entry is set on the confirmation candle and your stop loss is placed systematically, either strictly below the lower boundary of the macro structure or tucked right beneath the reversal pattern itself, depending on your personal risk management style. If the market breaks below your validation line, the setup is dead, and you exit with a tiny, controlled loss. This is how you eliminate trading anxiety and protect your capital, one systematic setup at a time. Trading is simply a game of structural probability, not emotional prediction. Stop buying randomly and start using objective observation fields. To map out institutional zones automatically on your TradingView platform, check the link below to access the Elkhouly SND Pro engine. Trade the structural facts. See you in the next breakdown.